I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Again, the overnights are the same. I did a handful of companies I day traded today. I can talk about those. And obviously there were some big changes in the market. Well, maybe not big changes. It felt like a big change in the market today when you compare it to the price action from the last few trading sessions, which has just been really, really tight. So let's jump into it. Let's talk about it. Let's bring up the chart here of the SPYs for us to review. The SPYs here, they closed down a little over 0.5%. NASDAQ about 0.7%. And the IWM, a little relative weakness here after several days of strength and getting a little bit extended. The Russell is down about 1.1% or so. So we keep a close eye on all those indices on a day-to-day basis. I don't look at the Dow as much. So, man, it felt like a big down day today, right? The stuff happening in Afghanistan, unfortunately, is really tragic. When I guess it was the second suicide bomber of the day. Killed a few American soldiers. The market took a pretty hard, fast dip on that. A little bit of a rally back up, and we closed pretty weak. But before I talk about that, let's talk about the big picture technicals here for the market. So really it's 4 green candles in a row, but the last 2 candles were rest days, consolidation days. And that's technically bullish because it allows this ADMA, this upper band of equilibrium, to slowly catch up to price. And what I have been talking about the last day or two is, are we going to see that time correction, or are we going to see a price correction? And I thought that it was more likely we would see a little bit of a price correction back down than sideways action, and it seemed like I was wrong. Last 2 days we went in a really tight range, and then once again this morning, the first bit of the day here before that unfortunate event occurred, the first bit of the day was a little bit weak, but it was also sloppy, kind of sideways price action. You can particularly see it when you're looking at the NASDAQ here. NASDAQ just sideways price action, sloppy. I remember remarking in the virtual trading floor that we broke new lows, and like 3 minutes later we broke new highs, and that's really tough price action, but it's in line with what we've seen for the last about 2.5 days coming into today. So not totally surprising. And then obviously the event occurred, which created a little bit of weakness. And now when we're looking at the daily chart here of the SPYs and the Qs, it's looking more like a price correction, not a time correction, which is more in line with what I was originally looking for. So Qs pulled back a little bit. Even with the pullback in the Qs, down about 0.7% on the day, we didn't even get down to the ADMA. So market could pull back a little bit further. You have previous resistance in the Qs at 370, so that'd be the first major spot that I want to see if it can hold as support. And I don't want to see us really lose the low of the last green Maribozu that we had here, albeit it's on a little lower volume that day, but this is the day in which the market breakout for the NASDAQ occurred. So that low is 368.79. So those are some pretty upper levels to be paying attention to in the NASDAQ on the downside. Should we pull back further? We did close kind of weak today. That usually implies a gap down tomorrow. I don't have conviction on that though. The SPYs here, similar situation. The S&P was time correcting over the course of the last couple of days, was not quite as extended as the NASDAQ was, and price corrected down today, basically to where the ADMA is. So I would roughly want to see, the shorter term levels here would be like this 445 area, I think, where we kind of broke out from. The ADMA is a little bit above that now, and then your bigger picture, real pivot is the August lows. Which again was just a few trading sessions ago before we ripped all the way back up. So we'll pay attention to that. I was remarking a little bit into the close on the virtual trading floor here about a little indecisiveness I have right now about the market. And I'll tell you what the indecisiveness stems from. Part of me wants to be really nervous about what's going on in Afghanistan, right? We were constantly seeing headlines throughout the day suicide bomber, then another suicide bomber, unfortunately American soldiers killed, and then there was chatter of another blast going off right near to the close, but now it sounds like that was actually the United States doing that blast, so the market didn't really react on it in the same way. And it's really scary stuff. At the same time, I got to ask myself, what does this mean actually for markets? It's obviously it's not a good thing for the world. I feel really bad for a lot of the people who are over there. But historically, we've seen markets not really care about this type of activity. And that's kind of what the thought process that I have to stick with, because that just seems to be the historical norm. And even with this, right? So what is the absolute worst case scenario? We lose U.S. soldiers over there, and we decide, you know what, we got to go to war in Afghanistan. Well, how is that any different, really, than what has been going on for the last 20 years? It's just back to the status quo. So either we're out and we're not in war over there anymore because we're out, or we're back to the status quo because we're at war. And again, historically, the market has not cared about this at all for the last 15 years. Obviously, the initial event that sort of sparked all this back in 2001, right? September 11, 2001. The initial event there obviously had a huge impact on the market, had a huge impact on the world. But since then, we haven't really seen too much of an effect on our actual market. So I'm inclined to just continue to look at the technicals. The technicals are bullish. We had a price correction here, and we want to continue to err to the side of the longs. With that said, I've also been advocating and really doing this myself on not really adding too much new stuff to the long side of this market recently. I started doing that a little earlier in August. I kind of stopped adding, and then when we started to get some signals on this pullback, I actually took some positions off. I got out of my Apple swing, I got out of my Amazon swing, which are a couple swings I've been in for a long time, particularly that Apple swing from pretty good prices, and I decided, you know what, I just want to also take some risk off the table. But it is still a bull market. We want to err to the side of the longs. With that said, I do have the TQQQ short now, which I haven't had, and it is acting as a little bit of a hedge. I put that on, I think, towards the close on August 23rd, or at least towards the second half of the day. So that'd be Monday of this week. Managed to barely not get stopped out over the course of the last couple of days. And then today, when the market actually was able to price correct a little bit, I was obviously glad that I had that on as a bit of a hedge. I actually made a mistake today that I'll talk about real briefly, and it ended up costing me a little bit of money. It's just kind of an anecdotal thing more than anything else. I had a really expensive bathroom break today, and I was rather frustrated by it. So I got my TQQQ short on, and I traded it back and forth here a little bit in the beginning of the day, and I probably made a few bucks for myself doing that. And actually, stop a second. My first trade of the day, I had a swing still on from the last couple of days, but my first trade of the day, I actually got much heavier on tighter risk on the short side of the TQQQ, and I'll show you why. In the pre-market price action here at 8:35, Fed Speaker Bullard came out and made some comments that inflation is kind of here to stay, and it sunk the market at 8:35. So that's a little bit of a news event, and when I trade news events, I can show you Tilray today, where I kind of had a break-even trade, small loser in Tilray, where I was also trading a news event. When I'm trading a news event, what I usually do is my stop loss will be the negation of the news event. So let me just go to Tilray real quick, because it's during market hours, and I can show it to you. It's really obvious. So with Tilray here, some news came out at about 2 o'clock that they were having some sort of conference. The executives were having some sort of conference about a path to have $4 billion in revenue by, I don't know, 2022? I don't exactly remember if there was a date on there or not. So it sounds like it's really good news. With that said, I don't know enough about the company to know what they're currently projected to do, so I really don't know if that's a massive improvement, but it sounded pretty good to me. And when I'm trading these news types of events, a lot of times it's also pricing versus my out, right? So if I was able to buy some stock at a decent price on the way up, my stop loss would be the low of the news bar, 1327. And you can see that it's the news bar. It's on a 5-minute that I'm looking at. I don't look at anything less than a 5-minute chart. So 1327 is the low. Big volume comes in. So if I'm buying stock on this because I think it's important news that could influence the stock, I want to make sure that I'm able to get a decent price versus my risk based on how relevant I think the news is. And then my stop loss is going to be the low of the news bar. Because if the market ever negates the low of this bar, or ever negates this candle, so it breaks the low of this bar, what does it mean? It means, one, the news really wasn't relevant. I misinterpreted that news. I thought it might have been important. I was wrong. The market's telling me I'm wrong. Otherwise, it never should be able to get back below that low. That's one. I forget what the point I was making. But basically, that's how I'm choosing my stop loss, right? I'm always trying to choose the stop loss where I know that the idea itself is wrong. So if the market is breaking the news, oh, I remember, point number 2. I know I'm wrong. Point number 1, I know that I'm wrong because the news bar low is breaking. The market's telling me I'm wrong. But point number 2 is if they're actually ever to break this low, every single person who just bought in this candle, and guess what? A lot of people just bought on that candle. Look at the volume here on this bar, over 2 million shares compared to the volume on any other bar over the course of the last couple of days. If they're able to break that low, that means that every single person who just purchased the stock over the course of that 5-minute period is now out of the money. They're losing money. And if people are losing money, what do? They tend to do one of two things, right? One, they manage their risk, so they sell. Selling can create a feedback cycle of selling where, you know, look where Tilray actually closed, 1325. It closed exactly where it started from. So maybe we could say that 1325 is like an equilibrium type of price for Tilray. But the reason why it broke new lows on the day and had all of these red bars in a row is because a feedback cycle of selling came into place, because you had all the people who purchased in this candle who are proven wrong, who are out of the money, who are selling for risk management. So that's why we got to make sure we have our stops in place, and that's how I trade news from a stop loss and kind of a risk reward perspective. So anyway, going back to the market itself, the first trade I took, and I'm really just talking about a silly mistake I made, but we all make silly mistakes, so I think it's worth mentioning. The first trade that I took in, I think it was the first trade I took of the actual market hours today, was when the market opened, I just whacked the bid for a low risk trade versus the high of the news bar from when Bullard spoke about inflation. So the high of the news bar there is 142.90. So I have a stop loss in, I believe at 142.91 would be where you want to have that stop loss in. And guess what? Immediately I'm stopped out. And I even remarked on the VTF, I was like, all right, well, that was really quick loss. But even when I got into the trade, I was like, you know, probably not the highest probability of success in the world, but if this trade works off this, I'm going to have a really good risk reward. Let's say that, you know, I was able to short a price of 142.70 and my stop loss is 142.91. I'm basically taking 20 cents worth of risk on this. And then the way that I like to trade, I speak about this a lot, I like to find intraday risk for a bigger picture reward. Well, what's the bigger picture reward? The bigger picture reward is that the market gives the price correction that I've spoken about for the last couple of days and corrects down to the ADMA, just the ADMA on the actual daily chart. So if we just stick with the TQQQ here, the ADMA is at 139.33. So potentially what I'm looking for on this trade, bring back my pre-market, what did I just say? The ADMA was at when I say 139.33? Let me check one of my other charts really quick so I don't got to type it up on that one. EDMA is 139.33. That's right. So if I'm shorting here at about 142.70 and I'm taking 20 cents worth of risk, and I think that it has the daily chart potential to get down to 139 30, basically where the ADMA is on the daily chart. I'm coming in for 20 cents worth of risk, and I'm looking at $2.70, $3.50 worth of reward. I assume everyone agrees it's a good risk reward, and for me it has the added benefit of also acting as a little bit of a hedge on all the long swing positions that I have. Another thing I've spoken about in the past with hedging is what I don't do. I've done this in the past and it's really only cost me money. What I don't do is just say, oh, hey, you know, I'm long $1 million worth of long positions, so let me short $500,000 worth of SPYs so that I'm 50% hedged on my portfolio. I don't do that anymore. What tends to happen to me when I've done that is I end up just, you know, losing money on those hedges. You know, just giving away gains basically on good trades that I otherwise have on. So I don't do that anymore, and I've actually also spoken in afternoon meetings about what I think the ultimate hedge fund pain trade right now is if you're short SPYs and short Qs while being long a lot of these speculative types of stocks that are down 20, 30, 40, 50% from their 2021 highs. That's like the ultimate pain trade right now. If that's, I'm hedged, I'm short SPYs while being long SoFi and Wish and Tilray and you know, a whole bunch of those other stocks that have just been getting absolutely destroyed. So I put that initial trade on. I got stopped out. I traded some smaller share size back and forth here a little bit. I got off the VTF radio at I believe about like 10:20 or so, which is a little bit earlier than usual. I just got to take care of a couple things, and the first thing I did was get up and go to the bathroom. What I didn't realize, I made a silly mistake. I left out a decent sized bid at I think like 142.40 off of the first initial short that I took off that pre-market high, so I got stopped out of that stock. I go to the bathroom real quick. I come back just as the market's making lows, and I'm like, all right, well, at least I got my, you know, I still have the same stock that I've had on for the last 3 days in the QQQ, and then I realized, oh my God, I only have 100 shares left. What happened? And I realized, well, it's because you left a bid out from your first trade, stupid. I'm talking to myself. I'm calling myself stupid. I'm not calling anybody else stupid except myself. I think I'm allowed to do that. Oh my God, you left a bid out. You're such a jerk. And I'm like, oh my God, I've only got 100 shares of my short left. And then like a minute later, I realized I'm long 100 shares. I'm not even short it. So I got this 100 shares of stock that's supposed to be my hedge that, you know, by the time I come back from the bathroom, I'm $1.60 out of the money on it, and I'm supposed to be, you know, short all this TQQQ. I accidentally covered the entire thing, and I'm short 100 shares that I'm $1.50 out of the money, and I was so pissed. Am I allowed to say that word? I'm so angry. I was just so upset with myself. So I didn't have that hedge for this down move. They did let me sneak back into the stock that I had accidentally gotten out of. So I took a loss actually on that little 100 share long that I accidentally had myself in when new lows came in here. So that stinks. And then I got back into my short more or less at the price in which I accidentally covered at. So now I still have that. But just a frustrating little mistake, man. I was so frustrated by that. But you know, it happens, right? I've been doing this for a long time, so and I was able to reshort that stock, but that was definitely at least a you know, probably a couple $100 little bathroom break I took there. So I guess it goes back to the conversation that we had the other day about the one trader who used to be on my desk who would never drink any water or drink any tea or eat any food, so they never had to go to the bathroom. Yeah, exactly. And maybe I should be that guy. I'll never be that guy. I'll never sacrifice my health for the business. As much as I love this business, I'm not willing to sacrifice my health for it. So I'll never be that guy. But it makes you get it, right? It makes you get it. Anyway, so a little fun anecdote aside there on just a silly trading error. You know, did a couple decent day trades. So first of all, shout out to the ProDesk VTF. You guys made me money today, and I love that. I love more than anything, you know, we try to build this relationship here in the virtual trading floor where we're all sharing our ideas, we're communicating, you know, game planning ideas, risk management, approaches, all that type of stuff. My best name of the day and another solid little positive day trade for me today were two stocks not on my radar at all. You guys brought them up in the morning meeting. One was COTY. I didn't even know that COTY had earnings, but when whoever brought it up, it may have been Shane, I'm not sure, brought it up in the morning meeting. We identified $9 as a potential like scalping type level because it was a resistance level. Normally, I'd be a little bit nervous to buy something that's that extended. You know, we're talking about a $9 stock where you got the ADMA down to like $8.50, and I'm buying this thing when it's extended by 50 cents on the daily chart. But we don't care about extension as much when we're dealing with a news name, an earnings name, a stock that's trading on really high volume because it can give continuation. So that $9 break, that's where I bought it. I had a buy stop for my entry. People ask me sometimes about, you know, what order types I'm using for my entries. I prefer to use bids and offers for entries whenever I can. I almost always use bids and offers for profit taking, but specifically for momentum style trades, it's usually when you need to take liquidity for the entry. So I knew $9 was the big daily level. I put in a buy stop at $9. My initial stop loss was the ignition bar low, so it's the low of this candle right here. So stop loss, you know, the low of the bar is $8.66. So I'm taking on like 35 cents worth of risk. I did have a game plan to average down on that into the 880, 870 area on the way down if I needed to. I didn't need to because it just came in with really great momentum and upside continuation off that. So the stock I took here through $9 through that daily breakout. Beautiful opening drive momentum on great volume. I booked a bunch of profit there. I traded it back and forth a little bit here throughout the day on some of my position, and you know, it turned out to be my my best name on the day. So shout out to whoever it was in the VTF that put this on my radar. The other one was BLDE. BLDE was also a call out from someone in the morning meeting. Also was not on my radar at all. I don't even remember what someone said. I think that this was excuse me. I think that this might have been a an analyst initiation as a buy with a $14 price target. I think if someone wants to fact check me on that. That we had reported in our morning news information. So we spoke about this little daily level that's at $8.25. We spoke about that it had an inside day yesterday with a high $8.14. So I was looking at $8.25 as a trigger entry here, a trigger in the first 5 minutes of the day. So basically, just purchased through that. Actually, no, I didn't. That's not how I executed this trade. I placed in a bid pre-market because it was above the inside day at $8.21. It was a refreshing bid because I didn't want to show my size and scare the market away because the stock trade's a little bit thinner. So my refreshing bid got partialed. I did not get the full size there at $8.21. For people who don't know, a refreshing order is a way that you can disguise your size in the marketplace. So we have the ability to do that. Just showing my level 2 here. This is the COTY as an example. COTY, by the way, I got out of this into the close. I no longer have the position. That was a day trade. Same thing with BLDE. I got out of it into the close. It was a profitable little day trade. And that's just because I'm not looking to add on new overnight exposure. But if you use your bid box, so I'm on light speed here, if you use your bid box that you would use to bring up a bid. So right now, I'd be set to bid at $9.35 on the ARCA exchange for 100 shares. Change that to 2,000 shares at a click of a button. So now I would be bid 2,000 shares on ARCA at $9.35. This box right here is the refreshing order box. Right now, it's set to refresh at 100 shares. If I get rid of this, there's nothing there. If I switch exchanges, if I go to BATS, there's nothing there. It'll show my size. So here, I'll just show you as an example, right? Bam, there's a 2,000 share bid on BATS that just came in. Let me cancel that. And again, I'm only showing this specifically for display purposes. I'm not looking to actually purchase stock right now. This is just for teaching purposes. Now, let's look at this, right? So same exact 2,000 share bid here for COTY, but I've got this little 100 populated here. So that is my display size. So a refreshing order is going to be the display size plus the reserve size is the total size. So when I press enter right now, you'll see currently at $9.30 there's a 100 share bid on ARCA. Someone's already bid 100 shares on ARCA. So when I press the enter button, the 1 that's here is going to turn into a 2. Bam, see, that's a 2. But I'm actually bid there for 2,000 shares. I'm just disguising my size using a refreshing order. I'm going to cancel that bid because, once again, I'm just doing this for teaching purposes. I'm not actually looking to purchase COTY. But that's what I did here for BLDE. I put a refreshing bid at $8.21. My bid only got partial. I didn't get the full fill, but it's also the low of the day, so I can't complain too much. And then the stock went up, and I was able to make a little bit of money on it. So shout out to the team here. I love, 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 love when you guys make me money. I also day traded that Tilray off the news. That was a small loser. It was like basically a break-even trade, small loser. And I traded this BLUW on the way up after it went to $10. This thing is absolutely insane. Almost never seen this. SPAC announcing that they're doing a vote to become some biotech company. They gap this thing up to like $30 or whatever. They absolutely destroy it. At $10 is kind of where the cash level comes in. This was also not on my radar. It was actually Colin or Josh over here that was talking about, oh my God, you see this BLUW chart? So I typed it up and I was like, well, you know, this thing just broke through $10, went to $9.67. So that's the cash value about on the SPAC if they don't get the deal done, if they don't approve it. So I was like, well, maybe I'll come in and I'll sneak in and I'll take a little bit of a buy here and maybe I can get a move for $1 or $2 out of it. I did not get a move for $1 or $2. I got a move for about 50 cents. It was enough for me to cover my risk. I ended up getting stopped out into $10 here, and then they broke this thing actually down to new lows. So for me, this was another break-even small winner, and that's pretty much my day. You know, managing my swing positions, that QQQ error that made me want to jump out of a window, and you know, day trading a few stocks, including, you know, COTY. You guys made me some money there. So shout out to the team for making me money. I love it. 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 That's all I got. Happy to take a look at any questions that you guys have. Scrolling up here in the VTF to see what you guys got for me. SPRT. Yeah, SPRT was on the radar as well. Oh my God, it's really up here. So this SPRT was on the radar because you guys also brought this up in the morning meeting. It was also not on my radar. I wanted to buy this through $15 was my game plan when you guys brought it up to me in the morning meeting. And it opened up above 15, and by the time I actually typed it up, because I was taking those other stocks as well, it was at like 1540 something. And then I was like, you know what, I missed my entry, I'm not going to take it. So I never got involved in this SPRT. And guess what? If I was in it, I would have gotten stopped out. There's no way that I would have been in this. I might have been able to not get stopped out on this tail on the second 5-minute bar of the day. There's no way I would not have gotten stopped out of this thing at, you know, 10:45, 10:50 when a new low of the day broke and they actually filled the gap. I would not have caught this move up to $20, even though it's a beautiful move. I would not have caught the after-hour move up to $21.60 because I would have been stopped out. It looks like it's a big enough move for me, similar to some of these other trades, where by having good game planning and good execution, I probably wouldn't have lost money in it, but I definitely would have gotten stopped out and I wouldn't have made real money in it because I wouldn't have caught that move. But yeah, definitely, you know, one of the crazy stocks of the day. This is the type of stuff we want to look at because it breeds opportunity. But again, going back to what I was saying yesterday and today about one of my favorite things is to take a trade and have it fail, but not lose money or even make money in it. You know, kind of like the BLUW for me today. That is one of my all-time favorite things, but it's about game planning and execution that makes that happen. So if I missed my execution and now I'm looking at it and I'm 40-something cents late and it's a $15 stock, I'm probably not getting involved in it. And that was it. The execution just wasn't going to be good enough for me at that price where you know, bad execution makes for worse risk reward, and I don't want to say it necessarily makes for a lower probability of success, but it makes for worse risk reward for sure. And then worse risk reward means that you might not be able to get your risk covered, and then all of a sudden you might have a trade that you lose money in that otherwise, because of good execution and good game planning, could have been a break-even trade or a small winner. So I never got involved in that, but definitely a solid one. Couple people here in the VTF talking about my expensive bathroom break, and people saying that they've been there. We've all been there for sure, right? Yeah. What else, guys? Any other questions? In Trader Pro, and so you're on Sterling Trader Pro, David? I can do it. I can show you in Lightspeed. I don't know how to show you to do it in Sterling Trader Pro because I don't use it. If you're in Sterling Trader Pro, reach out to Patrick, and Patrick can guide you on the possibilities of utilizing that order type. I like to use refreshing orders when I am trading stocks that are medium to lower liquidity, and it's going to be a large bidder offer. If I'm trading like a low liquidity stock or a medium liquidity stock, and I throw a sizable bid in, the robots are going to front run and chisel that order because they can lean on it. And they can use my liquidity as a stop loss for their own little microscopic robotic trade, which makes it more difficult to get filled. So in like a lower liquidity stock, a thinner stock like that BLDE, if I want to put a big bid in, I don't want to put that big bid in at that 21 cent. So I talked about how I got partialed on the bid in BLDE at the low of the day today. If I was showing my entire size, there's a real chance I would not have gotten any of that stock because the robots would have seen it, they would have front run my order, and I wouldn't have gotten filled anything, and then I would have made nothing. So that's why I use it there. There are some downsides to using refreshing orders as well. You always go back to the end of the line. So if other bids come on top of you, you're always going to go behind those other bids, so you don't get filled as easily or as fast. And I think that you don't get rebated for liquidity that you're not actually showing. So there's definitely downsides to using refreshing orders as well, but I only really do it in certain circumstances. There you go. Rich just asked the question that I just answered. If you're not showing your size in the bid offer, how much size qualifies for the rebate? Only the size that you're actually showing. Cool. Sebastian here. Are your swings based on fundamentals or some of them pure technical analysis? Both. So, well, all of my swings except for maybe BOEX, all of my swings with the exception of BOEX are based on technical analysis and possibly also fundamentals. My trades that are my favorite are where I have a qualitative fundamental thesis. I believe that this stock or this market should go up for the following reasons, and then the technicals confirm that. The technicals tell me the entry timing, the risk management. So I'm not going to just get into a swing trade typically based on pure fundamentals alone. Again, even though I'm kind of doing that with the BOEX SPAC right now, and that BOEX is making me really nervous, by the way. I tend to not do that. I want that technical confirmation, and those are my favorite trades though, where I have both. Also, next question here's from Sebastian. When you have this big picture take profits, do you wait till it reaches that level to sell, or do you start getting out partially as it goes in your favor? So I'm not 100% sure. You're probably talking about the TQQQ on the downside. It depends a little bit on the trade. It's usually a combination of both. I usually have some core holding that I'm really looking for the full move on, where I'm being really greedy on it, and I'm also implementing like a trailing stop loss strategy for reward maximization. And at the same time, I might have a smaller percentage of my position where I am exiting it as it moves in my favor. Usually what I end up doing with that type of stock though is I'll also be willing to rebuy it. So I'm doing kind of that cash flow type stuff that we were talking about in some recent afternoon meetings. Next here from Robert, would you say that DKS? You seem to love DKS, Robert. I'm very mature. DKS, simple DKS here. Let me see, what's your question? Was it a valid trade, buying on the way up at 128.80 at the 945 candle? I don't love it, but let's see here. I know you, and you were asking me about this name yesterday also. That's why you're asking me. That's why I asked if you love this stock. 128.80 is yesterday's low. Traps everyone in who is interested to short. Robert, I kind of think you're overanalyzing it. So basically what he's saying is, like, is it a decent entry here to go long DKS because it had just broken yesterday's low and it's kind of coming back up, so maybe the break of yesterday's low is getting longs out and potentially trapping in shorts. And I just think that you're overanalyzing it because of the degree of the gap from yesterday. There's going to be back and filling on this. Did somebody get stopped out at the break of yesterday's low on the third 5-minute bar of the day today? I'm sure someone probably did, but I don't think that that's really going to be what's affecting and creating a bigger up move in this circumstance while it's still this extended on the daily chart. So I kind of think that you're overanalyzing that one a little bit. From Jerry here, would you say the oversold counter trend trade like BABA is a bigger moneymaker for you? No, definitely not. For the trend in the long run. I've noticed the more experienced traders seek those out, although more difficult for beginners. No, definitely not. So the question basically is, do I do better with counter trend trades or with trend trades? Do I make more money in the type of Alibaba setup where we were buying this thing, 3 trading sessions ago, counter trend, counter momentum on the degree of downside extension? Do I make more trying to go long this, or do I make more going long something that's got a nice juicy uptrend that's breaking out? And the answer, without a doubt, is I tend to perform better. I think that there's much more reward opportunity when you are trading with the trend. Someone sent me an email this morning who commented about, as a comment on my afternoon meeting from yesterday, saying, I really liked that comment you made in the afternoon meeting where you said, assume the trend you are looking at will last forever. And I love that. I've more or less been involved in a Microsoft long swing. I eventually got stopped out of it because of coronavirus. But I basically was long Microsoft nonstop from 2014 until the coronavirus. Look at this move. Look at that trend. Assume your trend is going to last forever, and maybe it will. There's so much more reward potential when you are with the trend. When you are with the trend in a long position, your potential reward is technically infinite. It's technically infinite. It could go to infinity, right? It could, look at Amazon, right? Amazon was like a $2 stock at the end of the dot-com bubble, and look where it's trading now. You're taking a counter trend trade. You inherently have more limited reward because you're going to run into all these resistance levels. You're going to run into these moving averages. Your counter trend. Now, the thing about a counter trend trade is a counter trend trade can become a with trend trade, but it has to go through a process to do that, and it's much lower probability. So with trend trades are not only easier, they're less stressful, and they're more potentially rewarding, in my opinion. Anything else today, guys? Not too many questions today, which is fine by me. I got a lot of extra work I got to get done after the close today. What'd you say? One more? Two more. So first from Rich here, where did you learn to scalp during your career? When I was a new trader, I didn't keep a position overnight, I don't think, for the first 3 years of my career at T3. It was all pure day trading. It was a different market environment, and that was the first strategies I was ever really kind of taught were scalping type strategies. My time frame has expanded over time. My holdings have definitely gotten longer. My philosophy has changed over the years, and the market has changed over the years. Now I'm a big believer in putting yourself in those win-win situations and letting them run as much as possible. Because again, you go back to Microsoft, As great as, you know, you can make money doing scalping trading, you're never going to be able to buy a stock at $40 and have it at $300 if you're scalping, by definition. So, it's not to say I don't ever take scalps. I kind of did a little bit today, but that's not really where I think that I'm going to be making big money. It's more just making a little extra cash flow, living for myself. All right, maybe not the last question. What time frames did I scalp? And I still never looked at less than a 5-minute chart, by the way. Even when I was a pure day trader scalper, I never looked at less than a 5-minute chart. And I still prefer to scalp, even if I am going to scalp, daily levels, right? So it's still the daily chart. At COTY, the $9 was the scalp trigger, if you will, though I ended up holding it for the entire day. It's based on the daily chart. The execution is based on the 5. If I take a look at CRM, sure. So last question here. Entered in above 269 and added above the breakout at 271. In big charts, it seemed that that doesn't have resistance until 278, but you got stopped out at 275. You got stopped, but it stopped. It stopped at 275. Let me reread your question. You got in above 269, so today, added 271, and it stopped at 275. You didn't get any follow through. So first of all, I really hope you're out of this, because your trade failed and it closed on lows, and it's a big gap here, and this looks like it might want to pull back further. And you know, any trade that you're getting in needs to have the risk management game plan in place before you enter it, so you always want to know where that stop is going to be. 270 was a huge level for CRM. It was gapping up huge on multiple levels of news today, and I love this opening trade through 270 versus lows. So it's a good initial stock. It came into some resistance at 275. I know you've got like all-time highs here are more like 280, but it established at least resistance today into this 275 area. So I think you did the right idea. You know, I love this initial trade here through this I think it's more 270 than 271. I know you're saying you're adding through 271. I think that the real spot on that based on the daily chart's 270. But yeah, I love that opening trade versus lows. I just hope that you had a game plan in place and you got a decent move too. You know, more than 1-to-1 on your risk. So whenever we have a trade where we get more than 1-to-1 on our risk, you should be game planning in such a way where you never actually could lose money on that. So when this thing ends up failing, and this is failing, I'm assuming you're getting stopped out somewhere on the way down. Ideally, you're implementing a trailing stop system, so you raise your stop maybe to 272, because that's where my stop would have been right here on this 5-minute pivot low at 272, and now you bought at 270, 271, whatever. You get a great little $4 or $5 move for yourself, and you're getting stopped out, you know, $2 or so above your initial breakout entry price. You're not dealing with this garbage here on the way down, and even in a worst case scenario where you did give some stock back to the opening low, you're still getting stopped out at the opening low of the day. So hopefully you're out of it, and that would be good game planning, and I think it's a great trade outside of that. So that's going to cover it for today, gang. I'm going to wrap things up. It's 5 o'clock. You know, again, I appreciate the ProDesk VTF room. I love the community that we've created here. I get so pumped when you guys make me money. I did not have a super great day today. You know, some of my swings were against me. Luckily, I had that QQQ hedge on, despite the little anecdote story that we spoke about. But my day would have been worse had you guys not given me the ideas that made me money. I love when we feed off of each other. So shout out to the ProDesk virtual trading floor. If you are involved in watching it on YouTube, because we've been doing this experiment, we're broadcasting it on there, but you're not part of the team, reach out to info@t3live.com. Ask if you can become part of our team of traders. Have a great night, everybody. See you tomorrow.